because a lot of people want Crypto Savvy, so let's check him. It's hard to type because I have my mic in the way, so bear with my slow typing and messy typing here. Crypto Savvy. Yeah, I've heard a lot about this guy, which is weird because he's not actually that big of a channel, but everyone seems to talk about him. So we can take a look. I'll watch a couple minutes of his video and then we'll switch over to someone else. Alright. Bad news for Bitcoin.
What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and as usual, we're going to be going over the charts. We're going to look at what's going on. We're going to take a look at traditionals. Then we're going to go into a little bit of detail in the DXY. And then finally, we'll take a close look at Bitcoin, and I'm going to show you the targets that I'm looking for. I'll also show you the invalidation point of the bearish case scenario, which has been playing out all year, obviously. Let's take a look.
Crypto Savvy's a bear, someone says.
Look at what's going on, and we're gonna start out with, sorry guys, got something in my eye. We're gonna start out here with our RSI and our descending channel on the Dow. As you guys know, the bottom of this descending channel right now is above that, but remember yesterday I said if we broke this 113, then we would look for support around this. So I don't,
okay, straight off the bat, I don't think his DXY chart is correct, and the reason being is because the DXY chart, in my opinion, is very straightforward. The DXY chart has an uptrending line stemming from 2006. Okay, and we got a clear rejection off that line in the last week, a clear wick. I think he's looking at this secondary line that I have here, which is, of course, a valid line, but it's not the reason for the initial rejection. He's looking at this line that's stemming from 2018. So he's correct. Yes, dropping below that line was bearish. He is correct in that, but I think he does need to chart up where that line actually stems from, which is 2007.
112.50, somewhere in that range, that 55 EMA, and then a big bounce from there. If we even get down to that range, I do expect a bounce there though. As you guys know, my next target for the breakout of this was 119. Still looking for that. We also have 122 on the daily, and we're going to take a look at that right now before getting into Bitcoin. But as you can see, that's just a measured move of this rising channel here. We broke out, tested it for support. I do believe this is our next area to watch, 122.15.
Okay, so this is where he loses me because he's pointing at very high levels here, and those levels just aren't substantiated, mainly because of the fact that he's entirely missed the validity of this line from 2006. But that can be that doesn't mean he's a bad analyst or anything. I miss lines all the time. I'm just saying that his claims of DXY might be pretty off the grid due to the fact that he's missing out on a very critical long-term line. So I might skip his DXY section for that reason. We'll go to his Bitcoin analysis. This might be interesting.
Up with this falling wedge. Next test will be down here. When we test this bottom, we may be bottomed out there, possibly. So something to be aware of. But I do have... I'm
going to rewind this a bit.
Check them out if you have daily. As you can see, the RSI is matching up with this falling wedge. Next test will be down here. When we test this bottom, we may be bottomed out there, possibly. So something to be aware of. But I do have my thoughts on the Amazon compared to Bitcoin chart since December 2nd, that our bottom, our false bottom of 7,500 would be sometime in February or March.
So just hold on a second. Can someone confirm to me, does Crypto Savvy think we're going to 3K on Bitcoin? Someone confirm that in the chat. Because from what I've seen here, it seems like he might think that. Just say yes or no quickly so I can respond without watching too much. Does he think we're going to 3.5K on Bitcoin? From this chart here, it seems like he does. Does anyone know or no? Because what he just said, what he claimed was that Bitcoin is in descending wedge formation, which is correct. It could be, depending on the way you draw it. And it's got a kind of wedge form, a kind of triangle kind of thing on the RSI as well. And he's saying that every time we've retested the bottom of this certain level on the RSI, we see the bottom of the wedge. And so, as per Elliott wave theory, which is a 5-wave theory, 5-wave correction, we will see another retest at the bottom of the wedge. And he says that retest will happen at around 3.5K. Now, I would like to make it very clear. It would be almost mathematically impossible for Bitcoin to reach 3.5K. And the reason being is because the total amount of Bitcoin that has been lost, that is no longer in circulation, that cannot be accessed anymore, bumps up the floor price a significant amount to the point at which we probably won't get that low, right? And you might think, well, Wolf, I don't know about that. You might think, well, we reached 3K in 2020. It's like, well, okay. Let's see what actually happened in 2020. In 2020, we reached a price of 3,900 of Bitcoin. In 2018, we reached a price of 3,100 of Bitcoin. Since 2018, which is almost 4 years ago, we have never reached a 3,000 price again, besides in that brief drop in 2020. What you need to understand is that there has been 4 years since we reached anywhere near a price point that he's talking about here. In that 4-year period of time, we have seen an entire bull market and half of the bear market. In that bull market and bear market, we have seen a massive amount of Bitcoin flow out of circulation into lost wallets that can no longer be accessed, raising the floor price. Right? And in that period of time as well, we have accumulated more and more, as seen by the on-chain data, Bitcoin holders that do not sell their coins regardless of where the price goes. The floor price on Bitcoin is much higher than 3,000 on Bitcoin. That's what I'd say to that. And this is what I say all the time. I say it over and over again. Elliott wave theory is very dangerous because Elliott wave theory can easily justify extremely low price points with no substantial evidence in the charts or via actual real world data. For example, how many people hold Bitcoin. So I would caution him away from that. Now, do I think his analysis is valid from a TA perspective? Of course it is. Of course it is valid from a TA perspective. There's nothing here that I can critique from a TA perspective. However, in order to be an efficient analyst, I'm not saying he isn't. I'm just saying, in order to be an efficient analyst, you need to analyze from both a charting perspective and from a real-world perspective. And from the real-world perspective, I can tell you right now that 3.5k Bitcoin would be virtually impossible unless Bitcoin literally dies. That's my opinion on that.
We get a rally up to 1415 towards the middle of next year and then come crashing back down to around 3,500 towards the middle or end of next year. So that is what I'm looking for, unless this daily plays out as this falling wedge and we see this low this year. Now, if we see it this year, this 3,500, then that could definitely be the bottom, something to watch out for. But as you can see, this seems to be playing out perfectly right now. Let me get the RSI off there and show you guys the measured move of this descending triangle. If we break this 18.2, 17.6 could be support, but I don't believe so. That would get us down.
This is one more thing that I will say, is that he is correct. We are in a descending triangle on the logarithmic chart, but the first mistake he's making is drawing triangles on the logarithmic chart. There's no reason to be doing that. Okay? That's very important. There's no reason to be drawing those triangles on the logarithmic chart. The only reason you should be using a logarithmic chart, right, unless you're trying to fit a certain bias, is to draw long-term trend lines. The logarithmic chart does not need to be used to draw a descending triangle in Bitcoin. It simply does not. So what he's done is he's taken a conventional triangle formation, which is meant to play out on a linear scale, which is mathematically proven to play out on a linear scale. This is how TA is created, okay? I have a TA course. I have a very good understanding of how charting patterns work. Myself and Mega Crypto develop our course. Linear charts, that's where market patterns work the best. So he's taken a linear chart market pattern and he's applied the measured move in the same way as you would apply. He's gone to the logarithmic chart and he's applied the measured move from a linear chart market pattern to the logarithmic chart, and hence he has ended up with a price target that is significantly lower than what is actually meant to be there. Very dangerous stuff. Okay, so he's technically not incorrect from a charting perspective. That was a descending triangle formation. That was a valid Elliott wave theory. That RSI trend was valid. But again, I'll go back to the main point here. I don't think he's making the correct weighing up of value between the real world life scenarios and what's actually going on with Bitcoin holders and lost supply and TA. They aren't separate things. They need to be conjoined. So no, I think it's a big mistake that he's made there by using a descending triangle formation on a logarithmic chart for a target. I think that's a big mistake. Now, what he could do is he could say that this resembles a descending triangle, which it kind of does. Okay, he'd be correct. And he could take a target from that, and he could actually target it on the linear chart, in which case, by his own analysis, his actual target, his valid target, would be something like 9.8k, which, by the way, lines up with the CME gap. So I think, to a certain extent, I've just done his analysis for him, and I've come up with a much more reasonable target that also makes sense in a real-world scenario. As I said, we need to join the two things, TA and real-world. The real-world scenario is there's a CME gap at 9.6k. The TA is we've got a potential descending triangle formation. I've drawn it correctly on the linear chart. I would say that he drew it incorrectly on the logarithmic chart, and I've come up with a more valid price prediction based on that. So by his own analysis, I would say 9.6k, 9.8k would be a more reasonable target. But again, look, that's his analysis. He's welcome to disagree with me. Again, if anyone, by the way, if you're watching this right now, Crypto Savvy, I'm welcome. I'm very happy for you to come on and have a discussion with me. I think it'll be very interesting. I'm interested to hear your thoughts about what I say. There is a part of reaction videos that make me a bit uncomfortable. I don't necessarily enjoy having a one-sided conversation. It feels a bit almost doggish, where you can't respond to what I say. So please feel free to reach out and we can arrange a conjoined live stream and you can discuss this with me. But I will watch a little bit more of this.
To this 3,500. Now that would be sometime.
Gotta go. Cheers, bro. No worries. Have a good one, man.
In the end of this year, maybe even the end of this month, if it follows this trend line around October 30th. So be careful, be cautious. If it does come down quickly by November to this range, that could be our bottom. But we have other areas to watch for support in here. Let's take a look at those, and then we'll take a look at the Amazon compared to Bitcoin chart. Now, let's look at the 4-hour, and we're going to zoom in here. You're going to see a lot of lines, but I'm going to explain them all for you. All right, so right now, the breakout to invalidate this chart and these targets I'm showing you, we would have to break this 20,800 range. We do still have this chart, whatever, really doesn't matter, but the best thing you can do to help this channel is smash those thumbs up, guys.
This is what I was talking about before. So he brings up the Amazon fractal here. This is interesting. This is exactly what I wanted to look for before. Actually, this is very interesting. So let's see what he says about it.
I noticed a few people on my Twitter.
So on the left, he has the Amazon chart, and on the right, he has the Bitcoin chart.
Comments. That's another thing. If you don't follow me on Twitter, give me a follow. It's at CryptoSavvy1. Use the link down below. I'll put a pinned comment in there, and it'll have my Twitter link on it. That way you don't get scammed by the scam fake Crypto Savvy accounts. Anyways, just like we had the false bottom here, that's what happens in bubble pops. I've showed you that in Sony, Nintendo, a couple other ones. Once it has a bubble pop, you always get this fake rally, right? This was about over 100% rally to get everyone bullish again. And then it came down to break this low, and then it took...
So this seems to be another point of evidence he's using for his 3.5p prediction. He had a piece of evidence that he was using before for a 3.5p prediction that I basically... I think I personally debunked it, but I certainly disagree with it at best. And he's using this Amazon fractal to predict, as a supporting piece of evidence to predict that 3.5k. Now again, I would say that he's mistaken in doing this, and there's many reasons. It's because, reason one, fractals are not reliable. Okay, fractals are not reliable for price predictions. They are simply used as something to observe and monitor. And reason two, he is again using Elliott wave theory, and my points on Elliott wave theory from before are very clear. And they remain the same. I don't agree with the use of Elliott wave theory to basically any extent. I think it's a bit of a waste of time. I think it can be used to validate biases too easily for it to be actual TA. I think it's very speculative. And he's used Elliott wave theory in the same measure as he did before on this chart. And I think it's equally as invalid. But what I will say is that his ability to identify the Amazon fractal as a legitimate fractal is commendable. And his ability to identify the fact that Amazon also had a similar RSI and MACD at the same time, as per what the fractal did, is commendable as well. I just disagree with the end result of his analysis. This is the thing. The process of his analysis is fine. It's the end results of his analysis that I disagree with, and that's mainly due to the fact that I disagree with his use of the logarithmic chart, and I disagree with his use of Elliott wave theory. So, look, Crypto Savvy, I can't say anything particularly bad about him. He doesn't seem like a bad analyst. I just disagree with some of his methods. I disagree with some of his methods. Now, someone like Moonboy Kyle, Crypto, that's a completely different story. It's a completely different game feel. Thanks for watching the video, guys. I want to take a brief look into the BitGet Exchange. Now, this is my favorite exchange. I use this exchange for trading personally. I think everyone in Wolves Crypto should do so. Why is that? Well, the reasons are very clear in my opinion. First and foremost, it's 5 times cheaper than Binance, and Binance is known to be the cheapest exchange. It's also non-KYC on your personal end if you don't want it to be, and that obviously stands true to the values of cryptocurrency being decentralized. You can also KYC if you want to make it easier for tax reasons, but if you don't want to, you don't have to. That means that it is available globally, so everyone in the world can access this exchange due to the fact that it's non-KYC, which is great. It also has a protection fund, which is a very important thing, right? Because exchanges get hacked all the time, and people get hacked all the time by people in their personal lives. If you do get hacked and something happens, you can make a claim to that protection fund. They've got over like $200 million in reserve, so that if you make a claim and your claim is accepted, you can get that refunded into your account. That adds extra security to the exchange as well. And then on top of that, it's got a reward center that's available with my referral link, and you can gain access to over 4,000 USD in rewards. And I think just a temporary time frame, there is an extra little bonus thing going on. If you sign up to the exchange, use my referral link, and you do one trade, you'll get $10 deposited into your account, regardless of whether that was a profitable or negative trade. So go ahead and sign up to the BitGet Exchange, use my referral link. It really helps out the channel, and it definitely helps out yourself. This is by no doubt, by no stretch of the imagination, the best exchange I have found in the cryptocurrency market. It's so good that I actually reached out to these guys for a partnership. They didn't reach out to me, so check it out. And then we've also got the Crypto Academy. And if you're interested in becoming a trader, if you're interested to learn how to trade, to learn how to do TA, to learn how to identify market patterns, etc., and navigate an exchange correctly, you can sign up to this course, Become a Trader, a 10-unit course. This course is, of course, developed by myself and Megawell Crypto, who's a fellow analyst in the space that a lot of you already know. We work very closely, and we worked closely using our 2 separate perspectives on the market to create one very consolidated, very concise course that is no doubt extremely useful for anyone wanting to become a trader or anyone wanting to improve their trading capabilities. We've got 10 units. All of these units have been critically analyzed by ourselves and also people we know in our personal lives, and we found them to be completely coherent and completely effective in teaching people how to trade. We use different learning strategies, for example, visual learning, verbal learning, practical learning. We've incorporated all of that in, and this is by no stretch of the imagination the best course you're going to find on the internet for cryptocurrency education. So go ahead and email us here at Crypto Academy Courses to find out more information. Without further ado, I'll end the video there. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.